Okay, welcome to the Personal Finance Getting Paid presentation lecture. Please make sure that you have the note guides that accompany the presentation lecture so that you can jot down some notes and prepare yourself for upcoming assessments as we go through the material in this presentation lecture. Okay, let's first of all think about when it comes to getting paid. A lot of us are going to associate that with being employed, having a job, having a career, and getting paid for our services. When it comes to that, there are two primary sources of employment. Either you're self-employed, possibly an entrepreneur working for yourself, running your own business, or you are employed by an employer, which means that you are doing a specific task based off of a skill set that you have in order to help an employee produce goods and services for consumers, and you are paid for your skills and your time. Now, when it comes to different occupations, jobs, careers, etc., there are two predominant ways that you get paid as an employee. The first one is a salary. This is a set amount of money. It's not dependent upon the specific number of hours you work. So say, for example, you are making $30,000 a year. It doesn't matter how many hours you work during the week, during the day, during the month, you get paid your $30,000 a year. The basic premise behind this entire philosophy is you do your job, we pay you $30,000 a year, whatever means necessary. It could be more than 40 hours a week, could be less. Now, this is a little bit different from an hourly wage, which is earning a specific rate for every hour that you work. An example might be $16 per hour. Minimum wage for the federal and the state is the minimum amount that has to be paid to an employee at an hourly rate. Right now in Wisconsin, I believe $7.25. It's either $7.25 or $7.15. I always get mixed up with that particular number, but that would be the minimum wage. Obviously, any employee, depending upon the employer, could make more than that per hour. Now, different methods of payment. This is how employers will pay their employees for their services. You could get a paper check. A paper check might be picked up at work as well as mailed to you at home. Direct deposit, which is a more common way of paying employees now in today's day and age. This is when a payday comes around, say like on a Friday, and your pay for that particular pay period is directly deposited into, say, like a checking account. Another one, which is, I don't necessarily know if it's very common, but it is another common practice of paying employees, is using a payroll card. Now let's take a look at these different types of paying to employees. Let's take a look first at a paper check. This is when you can access the funds by cashing or depositing the check, endorsing the back of the check, taking it to your financial institution, asking for it to be deposited, or just cashing it and grabbing the cash from the check in a cash type way. Direct deposit, also another way of cashing your check, but this time you do not have access to the funds directly after visiting your financial institution. The wages are deposited directly into a depository account of your designation. Could be a checking account, could be a savings account, could be some other account. Now, payroll card. This is the one that is used, but it is not quite as common. A payroll card is going to function similar to a debit card, except not linked to an employee's personal account. Wages electronically loaded each particular payday for each particular pay period, and fees are common. This is obviously a convenience method of paying employees, and in order to provide that convenience, there is a fee associated with it. So not the most common not the most common technique used to pay employees, but in some instances it is used. Methods of payment, pros and cons. Let's take a look at the pros and the cons to each of these different three methods of paying employees. Let's take a look first at a pay stub. So normally, no matter what method of payment is used, there's got to be some type of a record in terms of that pay period and how much that you were paid for your services. The pay stub is normally going to outline wages and deductions made to those wages. And so if we think about this for a second, ponder this question, and we will be discussing this with our upcoming activities in class, is why do you think it is important to understand your pay stub? We will be doing a number of activities to decipher a pay stub so that you understand exactly what is being represented on there in terms of financial information. Here's an example of a pay stub. Some of them look similar to this, but they are not all exactly like this. So we have Joel Beacons, or Joe Beacons is the name of our employee, the identification number as well as address, pay rate, and pay period. Now, following that is the summary. This is the amount of earnings that were earned for the current pay period and the year to date, which is YTD. The amount of the earnings based off of the amount of hours worked during this pay period, and the deductions. This is what is deducted from the check for FICA taxes, for federal income tax, state income tax, it might be a retirement plan, other voluntary deductions such as health insurance, workman's comp, unemployment. So all of these could be possible deductions. They're not always going to be the same with every employer, but this is a common reference to the different deductions that you may have to pay as an employee. And in the very bottom, you will see different allocations to possibly leave days. There could be sick days, personal days, based off of what you have accumulated in your agreement with the employer. How many days do you have? How many days have you used? How many days do you have remaining to use? So on. All right, so if we take the summary portion, this is strictly the earnings. So we have the gross income for the current pay period as well as the year to date. So this is the earnings, money coming in, gross and net. Gross is the amount of income that you have earned. Deductions is what needs to come out in terms of taxes and other voluntary deductions. Net income is what you get to take home as an employee. Now the earnings, the breakdown of the earnings is based off of the rate, which is $15. This looks like this is an hourly employee, so $15 per hour, 160 hours worked. You do the math, that dictates the current or gross earnings of $2,400, and then followed by the year-to-date earnings. Now, as it relates to this pay period, there were no overtime hours worked. The deductions, this is what comes out of your check before you can even take any of it, before you can cash your check and access any of the funds that you have earned for working those hours. Federal income tax, state income tax, that's deduction that is responsibility of the employee. Now, Social Security and Medicare, that is covered by both the employee and the employer. Retirement plan, looks like there is some type of a matched contribution here. Whatever the employee pays, the employer picks up the same amount. The health insurance, it looks like the employer is going to pick up $400 of the $500 overall cost, where the employee only has to pick up $100. And then the other deductions, which are not the responsibility of the employee, workman's compensation and unemployment insurance. Optional payroll deductions. These are ones that as an employee you can request be taken out of your check. You'll find that different employee benefits, products or services that add extra value to the employee beyond wages earned can come directly out of your paycheck before cashing. The employee's portion of the cost is deducted. This could be insurance such as health or life, could be retirement plans, 401k, 403b, could be flexible spending accounts for other health insurance potential costs, maybe prescriptions and things of that nature. Depending upon your employer's insurance plan as well as employee benefit plan, these optional payroll deductions can change from employer to employer. Well, that concludes the presentation lecture on getting paid. We will do a number of activities, either in small group, individual, or large group, to practice these concepts and be able to apply them correctly. So make sure you go back through the presentation lecture if needed in order to make sure you have all the notes, and I will see you next time we meet in class.